What's up, Mortgage Coach community? Dave Savage coming to you live with Katie Trinidad. What's up, Katie?
Hi, Dave. Thanks for having me.
Thanks for being here. It's been way too long since I've had you on this stage in an interview. So hopefully we won't go another. God, it's been more than a year.
Yeah,
right?
It's been a long time, and I appreciate the invite back.
Yeah, well, I'm looking forward to it, and I'm looking forward to seeing you in San Diego tomorrow or the next day.
Yeah, thank you.
So that'll be fun. So guys, I want to talk to Katie about how she's helping home buyers optimize their purchase power, how she's helping families get confidence in this higher interest rate market, and how she's using creative finance strategies to help families get the home they want and to win the home they want, because it's still hard to get your offer accepted out there. So Katie, could you tell everybody what market, a little bit about your marketplace and a little bit about your production?
Yeah. So I'm in Northern California, and our average sales price, gosh, I feel like it's pushing $750 in our market. So yeah, that's the market that I'm in. My production for 2021, last year, I did 217 units for just shy of 91 million. So that was my—
Congratulations.
Thank you. Thanks. And then year to date, I want to say I'm at 60 units for over a little over 20 million. Don't quote me on those numbers, but
what do you think you'll get for the year? Like, what's your goal for the year?
Yeah, ask me 3 months ago, it would have been, my answer would have been a lot different. I'm going to say, yeah, my goal is still 200 units, and ideally 100 million in volume.
All right, so we're still still have hope.
Yes.
For 100 million. So cool. And then let's just talk about how you're approaching this market, where rates have gone up over 2%. Is it still a lot of bidding wars to get a house in escrow?
Yeah. So we're starting to see some changes. And I noticed in the Facebook group that you have, somebody had mentioned they're utilizing the seller concession strategy, which I love that strategy. It's something that we talked about several years ago. And I love that. We're just not there yet with regards to our market. Most houses, rather than getting 30 offers, we're still getting 8 to 10 offers on it. So we're not quite to that point where we can start negotiating with the sellers to get that seller concession. We're starting to see some price reductions. So I do love the idea of, rather than doing that price reduction, let's offer that seller credit back to the buyer, so that they can, use that seller credit towards buying down the interest rate. So again, that's a little bit about our market. That's what we're seeing houses do. They're still going with multiple offers. So what I'm seeing, our buyer these days definitely looks different than it did 2 to 3 months ago. And our buyers have lots of equity that they're sitting on. And a lot of times they're, changing locations. I've got one client that's coming from Southern California to Northern California. Again, lots of equity, lots of move up buyers right now. So I'm showing them different ways to how they can, keep that payment as low as possible, and also keep that cash to close as low as possible, so that they can walk away from that sale with some extra money in their pocket, rather than, using all their sale proceeds towards the purchase. So I'm prepared to share a strategy looking at 15% down, buying out mortgage insurance rather than putting 20% down. And I think it's the numbers are a little shocking, and I think it's going to take some getting used to like really let this sink in. But I think it's a great strategy to share with people.
Good. Well, I'm looking forward to seeing that. Before you show it to me, so you're doing a lot of move up. Have you done any move down, where someone is like, oh, I want to, move down, take some equity off the table, right size lifestyle? Have you seen any of those?
I haven't seen a ton of it. No, I'm still seeing the people that are going out of their first house, transitioning from their first house into, their next house. I haven't had too many move downs.
Okay, no problem. Just asking. It's one of those things where, when people have equity, they have options. And And it's just a good thing to like, hey, you got this equity. Do you want to do home improvement? Do you want to
Yeah.
move up? Do you want
Yeah.
to move down? And so cool. Well, let's go through the strategy. Why don't you
Sure.
frame it so that we kind of understand the client situation, and then
Yeah.
show us how you brought clarity and value to this customer.
Sure. Yep. So we're looking at in this scenario that I put together that I'll show you guys is we're looking at a purchase price of 700,000. And again, looking at two scenarios, is it better to put 20% down, obviously no mortgage insurance, or should we put less down? And what does that do to our numbers? So, again, getting the client to think outside the box of like, you don't have to put that 20% down, even though you have that equity. Let's keep some of that equity set aside, left over in savings, invest it, do other things with it, keep money in your pocket. And how can we play with those numbers? So yeah, that's what we're looking at, 700,000.
Well, let's check it out. Show it on your screen and walk us through this. So reminder to everyone, we do mortgage coach training every Wednesday and Thursday. Wednesdays at 11 is our strategies training, and 9 a.m. Pacific on Thursdays is just Q&A. So if you don't know how to do this or anything you hear about in our videos, we'll train you. And we literally have training every day of the week, but that's those two. All right.
Yeah.
So, and by the way, I don't know how this client was, but one of the things I'm hearing from interviews is anytime you can just help someone tailor something that they didn't think of, you're better off. Like I did an interview recently with a loan officer that got a credit alert. He got a credit alert that someone was shopping with his big bank, and he had basically wanted 20% down with a big bank. And then he's like, hey, what about this mortgage strategy? And next thing you know, big bank's rate didn't matter because it was a better strategy.
Right.
Do you see that a lot?
Yeah, I think what I see, and probably for a lot of us out there, our biggest competition is, Rocket Mortgage, that isn't telling people that they're paying X amount to get that interest rate, right? And a lot of times they give them one option and that's all the client gets. So yeah, when we can give the client different options and different scenarios to choose from, I just think that's what sets us apart from anybody else in the industry. And I'm also getting some feedback from my realtor partners that, they want me to work with this client because the lender that they're working with, they aren't getting options. And what better way to give them options than, mortgage coach? It's easy for people to understand. People love the video. That's something that I've embraced probably since our last conversation, Dave. I'm doing a lot of video. And just this morning I did one for a client and he says, this is so awesome that you can give me all this information. You can send it in a video and it answers all my questions. So yeah, I love the feedback that I'm getting and I'm embracing the video.
I love that customer testimonial. So walk us through this.
Yeah. So again, two scenarios here. The first one is putting 15% down. Reason why is because again, we're keeping that cash to close lower than that 20% option. So what I'm doing, and that second scenario is with the 20% down. So what's shocking to me is, well, let me back up for a sec. So this is 700,000 purchase price, 15% down, but we also have a rate buy down. Okay, so that's what we're doing with some of our extra money because we know that they're going to have at least 20% to put down, but we're going to take some of that 20% to use that towards the rate buy down. So that's what we're doing in this first scenario. We're also buying out the mortgage insurance. Okay, so this monthly payment, I'm going to click on that. Can you see this screen, Dave?
Yeah, I can see it perfectly.
Yeah, cool. Okay, so with this payment, I just noticed that there's mortgage insurance. Hold on one second. There's mortgage insurance in the second one and there shouldn't be.
Wait, watch how fast she tailors this, gets it updated. Boom.
Yeah.
Insurance was there. Now it's gone and it's all real time, guys.
Yeah. Yep. Okay. So here, this is what's, again, so shocking to me is look at the difference in the monthly payment. We're looking at almost $300 difference in the monthly payment. And the 15% option still has mortgage insurance that we're buying out. Okay. So that mortgage insurance is not included in the monthly payment, but check out the cash to close. We've got 135,000 in the first scenario. And with the 20% option, no rate buy down. Okay. So that's just par rate. look at their cash to close with the 20%. So they're going to have $22,000 left over to maybe pay off debt, right? Maybe to, put in savings or invest that money. And it's giving them a monthly payment that's $300 lower than that 20% option.
Yeah,
So
the numbers don't lie here. Scroll down real quick. I'll go to the bottom real quick. Go to the very bottom. That's the payment all the way down. Boom. Okay. One thing, I don't know if you did this, actually go into the advice engine real quick. I want to, and I don't know if you do this, but go into the actual advice engine, where yeah, there you go. Now go to the analyst screen. Okay, you're there. Now I want you to change the long-term analysis to net worth. No, leave that there. Scroll down a little bit. Like scroll down. Yeah, there you go. Change that long-term chart to net worth. Okay, and then scroll down a little bit more.
Oh, sorry.
Scroll down a little bit more and go to adjust reinvest. And in the 15% option, let's go down and put in, it wasn't quite 20, was it $20,000 difference in cash to close, or was it 17,000?
It was about, was it 22, I think?
Oh yeah, 22. It's like put in 22,000 and an asset accumulation, and then put like let's say he's getting 6 or 7% rate of return.
Let's say 6.
So on the 15%.
Oh, sorry. Yep.
Yeah, put in 6 and then put in, 22,000.
And we're doing 22 here.
Yeah. Okay, now let's go back. Go ahead and close that. And let's go back to your report. And then notice that, guys, look at that. So it's, not only is it got some monthly, enlightenment, but when you look at the net worth, it's a big difference. And so one takeaway for everyone, like this was a pretty subtle, like 20% versus 15%, but there's a lot of cash buyers that if you just said cash versus mortgage and invest the difference, they'd be doing a lot, which is good for everyone on this call. And there's a lot of people that, I'm moving up and I just want to sell my home and put all my money into the new home. And you're like, well, let's do a scenario where we put all the money in the new home and you get your lowest monthly payment. And let's do a scenario where you put the least amount of money in the new home and you invest it, or you buy an investment property. So I love what you did here, Katie. Anything else you want to add?
Yeah, I think just another thing that I'm seeing is, people have debt. People have sometimes a lot of debt, right? So when you can show this scenario to a client and say, hey, and I love what you just did, we take that extra 22,000 and show them what we can do with it if they are earning 6% in interest. That's awesome. It's even more powerful if we can say, hey, here's this 22,000 that we have left over. Let's pay off that car that has a $400 monthly payment on it, right? So now we're going into this house with even a lower payment than what you thought it was going to be with that 20% down, but now we're eliminating this debt as well. So yeah, I think it's, we just have to, we as mortgage planners or loan officers, whatever we're calling ourselves, we really have to think about, how do we look at things outside the box? Rather than just, oh yeah, you've got 20% down. We can't just stick with that and run with it. Let's just present the information. So again, the client has those options.
I want to show you something. Go back to that reinvestment strategy. And instead of doing the one-time buy down, go back to that. Yeah, go there. And instead of doing the 25,000, or go up. Well, I'm not going to walk you through it, guys, but let's just say that was paying off a car loan that was $400 a month. You could change that to $400 a month. Like, hey, what if you did this, paid this off, and then had that $400 a month either pay off your mortgage faster, or use that $400 to build up your net worth faster. So just as a reminder, guys, that's what mortgage coach / mortgage advisors do. They don't just quote rates and programs, they give options, and then they show strategies on how to make a mortgage decision that helps a family achieve their goals and their freedom point faster. So great example, Katie. Any other ideas that you're doing to help optimize purchase power and help families navigate this marketplace?
Yeah, I think it's, just before, when interest rates were so low, we were still having the conversation with clients about, how can we buy down the interest rate if you want to? What does that look like? And we show them how long it'll take for them to recoup that cost. I think those conversations are even more important these days because people are still real payment sensitive, right? So I'm talking about buying down interest rates more than I ever have
You have an
before.
example of one of
Yeah.
those?
Yep.
Yeah, let's pull up a seller buy down. And guys, I'm interviewing Dan Keller tomorrow, 9 o'clock Pacific. And the whole conversation is around, strategies in this high interest rate environment. And I know he's going to be talking about a seller buy down strategy. So let's see how Katie does it. And Katie, let's forget not to talk about video. I want to talk about video before you leave. So we'll come back to that.
Okay, let's just make sure this one doesn't play for anybody that's watching this, okay? Because
Yeah.
I don't want that to happen. Okay, so we've got this one here, and I've gone around and around with this client, so I've changed these scenarios a few times, but we landed at a 620 purchase price, and I showed them 180 down with a rate buy down. I showed them 175 with a rate buy down, and then the last one, 180 down, no rate buy down. So really, again, just giving him options. I know where he wants to be payment wise. So that's why I put these together. I think the other thing that's really important, which I've always done for clients, is people are always curious, what if I put an extra $10,000 down? What does that do to my monthly payment? I'm in the conversation now more about, let's use that extra money that you have towards that rate buy down rather than towards the down payment, because your money's going to go farther that way, right? So using that money towards a lower interest rate, you're going to be saving more money than if you were to use it towards the down payment. So that's not a strategy that I have on this one, but it's one that I prepare anytime I'm going through the initial conversation with clients. I'll give them, again, that option of $10,000 additional down, or using that 10,000 towards that rate buy down.
Well, this is another, just again, optimizing purchase power, leveraging a unique creative finance strategy to help families, pay less in monthly payment, buy down their interest rates. And again, you're doing everything right. I do want to check out one thing on the advice engine. So if you notice, everyone, if you click on settings, you can go into gamification. You can see that Katie's created 797 TCAs. And as you can see here, she's now adding videos to them. You've done over 103 videos, and they've been viewed over 4,000 times. So I don't know exactly what 800 divided by 47, like what about 5? A little over 5.
Mm-hmm.
That means, every one of her links is on average being viewed 5 times, guys. And I guarantee you that's because Katie's doing a really good job of framing what she's sending to people, and she's adding a video to it. We've found that when a video gets added to a TCA, it gets watched almost 50% more. So maybe you were averaging 3 views per TCA before video, and now you're up. Anything else that you've noticed since you've been adding videos?
No, I mean, this is a personal thing, but during COVID and when I was working at home a lot, I wasn't getting up every day and putting my makeup on and having my hair done or anything like that. Now that's part of my process, like every day, because I'm doing so much video. I want to make sure I'm ready. So I do like that, because I've changed up my routine, and I just feel better when I'm prepared, and I can record this video in seconds and have it be done. So and you've been saying this for as long as I've known you, Dave, and that's a lot of years. Video is where it's at, right? And even if I'm sending over a quick video introducing myself to a new lead, it just goes so much further than just a phone call or an email. So I would encourage anybody that knows me, they know that I had a hard time with video. So I would encourage anybody that has that hang up, do it, because your clients appreciate it. They don't care. They don't care what you look like. Only you do. But I promise you, on the other side, they just appreciate that information, and they appreciate the touch.
And also, wouldn't you say it saves you time? Like, it's
Oh yeah.
faster to add a video than write up an email, and
Yes.
it's just a time saver, guys. And it's also a time saver in the sales process because there's multiple decision makers, husband, wife, maybe a father-in-law, maybe a, real estate investor buddy at work. There's other people that have influence over this loan. And when you put a video on it, they're all hearing and seeing your perfect, but not perfect, ahs, but they're getting to see you share what it is you're presenting. Uh, what about one thing I've seen a number of people in our Facebook group lately, how they're using Mortgage Coach with builders. Do you do much builder business?
I don't know, but I can't wait to go back and review some of those videos and that content that you've shared in that Facebook group, because that's certainly something that I want to go after. I just haven't taken the time or made that a priority. But yeah, I definitely want to check that out.
What about cost of waiting
Yeah,
analysis,
yeah,
appraisal gap, TCAs, any other type of total cost analysis that you're
yeah,
doing a lot in today's market?
yeah. Cost of waiting was a big one. So I did a real estate roundtable is what I call them. And I did that with a bunch of my agents that I work with, and that was really powerful. I did that a couple months ago. And I just, showed data based off of last year's information, where interest rates were at last year, where prices were at last year, and then, where we're currently at this year. And then I projected what next year prices are going to be, and some estimates on interest rates too. And that was really powerful. I had, as a matter of fact, I'm funding a loan on Wednesday for a client who received the video and the content from her agent. And we've been working with this client for a little over a year, and she sent her the cost of waiting presentation that I did. And they got out there and they started looking, and sure enough, they're closing on Wednesday. So it's powerful, as long as we're, getting that information out there. And I would encourage anybody that's watching this, if you haven't done it already, prepare one of those for your realtor partners, because that's what they need, right? That's what they need to get more buyers off the fence is, what is the true cost of waiting. And when they have that data and those numbers in front of someone, that's more powerful than, someone explaining, oh yeah, prices are projected to go up by this much. But when you can actually show them that information in numbers, it's way more powerful.
Cool. Well, I am looking forward to seeing you this Wednesday. If you don't mind forwarding me the 2 TCA links that we went through, and then one cost of waiting.
You got it.
For anyone watching this, we'll put links to Katie's total cost analysis down below, so that you can check those out. And Katie is always ahead of the curve. I remember when I first started doing interviews with you, is when the point of sale link came out. Like, that was like a big deal. Like, oh, you can send the consumer a link, and then they could click on the link and fill out an app. That was like a new idea several years ago. And Katie was one of the leaders in the country at getting her clients to use that link. And now everybody uses the link. What percentage of your clients, use a link for an app versus not?
99.8% use them.
Exactly.
Use it.
And remember when that was like, you were like one of 100, and everybody was like, oh, 20% of the time. So my message with that, guys, is the world is always changing. And I love the quote, can't remember the guy's name who quoted it, but the illiterate of the 21st century are not those who can't read and write, but those who can't learn, unlearn, and relearn. And so if you're not putting a video on your total cost analysis, promise me, it's literally as big a difference as that link versus no link. And if you're not giving your families a dynamic total cost analysis link, guys, you're living in the market 5 years ago. Like, it's time that you give a link to take an app, you give a link to interact and deliver options. Katie, any other closing thoughts before we wrap it up?
Yeah, I guess just one last thing that I want to say is, a lot of times us as loan officers, and I say this because I know where our company stands as far as like adoption rates of technology. when we adopt technology, especially Mortgage Coach, when we adopt this and we actually implement it into our business, sure, it's one more thing that we have to learn, but what we a lot of times miss out on is the value that it brings to your client, right? So when your clients start receiving this information, I mean, I would say Mortgage Coach is probably at least half of the reason why I have the business that I have is because it sets me apart from anybody else, right? When I can send this information, I'm sending options. Clients have different options to choose from. I'm explaining it in a way that's easy to understand. When they have this in a Mortgage Coach fashion, again, I'm going to be better than that Rocket Mortgage loan officer or Loan Depot or whoever else. So yeah, I can't say enough great things about Mortgage Coach and appreciate what you have to offer, Dave.
Yeah, well, I can't appreciate you more. And there's no doubt we live in a world where you need to deliver a high touch and a high tech experience. And that's not where the puck is going. That is where the puck is. And loan officers that are using technology and media are taking market share from loan officers that don't. So hopefully y'all got value from today. If you did, give it a like, share it with your mortgage friends. And Katie, can't wait to see you and Dan
You too,
in a couple
David.
days. And this is a wrap, everybody. Have a great day.
Bye.